And welcome all. Welcome to Financial Freedom. My name is Samir Bapat, and today we are going to uh, we are in the session 3 of 12. So we are, as you are aware, we are conducting 12 sessions. So, but today is the third session. Recording of previous session is already uploaded on the YouTube. Hopefully, every one of you has gone through it, and let's build upon whatever we have learned till date. So what is it that we are going to learn today? We will be understanding the magical world of gaps. So I'll be explaining you what is the gaps, what is the significance of gaps, and what is something very magical about that gap. Then I'll be explaining you in brief what is a trend and how we say it has reversed. So because trend reversal is very important for buying and selling. So we will be discussing first what is a trend and what is its reversal. Then I'll be taking you through the reversal patterns. Based on the reversal patterns, when to buy, when to sell, we'll be learning, and then uh, mostly we'll be finishing this session in another 45 minutes. So post 45 minutes, or if we have time, I'll be taking any questions based on the trading view, because you must have practiced about trading view last week's session on demand and supply zones and all, and candlesticks pattern. So if you have any questions, I'll be taking those questions. First, we'll cover the first 3 points, then I'll be taking the questions if you have any in your mind. So let's go ahead. Okay, so what is our objective of this session? Our objective of this session is, you have to keep in mind, how many of you attended the session in last week, last Wednesday, or you have seen it on YouTube? Can I have yes? Yeah, Divesh, money control charts are okay, good enough. Yeah, so okay, who all were in the last week? Yes, 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 yes. Okay, great. Now we are going to build upon the last week's session. If you have not seen or attended the last week's session, I have already shared in the group. You can have a look at it. Now, what we will be doing is, we have already learned what is a demand and supply zone, which we covered the last week. We will be using classical method today. We will not be going through that volume profile. Today, I'll be drawing simple support resistance lines, and mostly those are the demand supply zones. So I'll be using the classical way. So since you already know demand supply, where to draw the lines, you'll be drawing the lines. Then mark it with a line we have covered in the last week. What we have to over and above that, now we are going to learn. At these points, at these junctions, we have to wait for a reversal pattern. Aggressive way is, agar wahan pe aaya hai, so we can immediately buy as soon as it comes to that band. Little safe game is, we wait for a reversal pattern for a confirmation that okay, it is likely to go up from here, or it is likely to come down here. So this is what we are going to learn today, reversal pattern. So whatever you learn, you have to put it on the top of what we learned last week. Supply demand zone, reversal pattern. Then we'll take the trade above the reversal pattern. Stop loss is below the reversal pattern, and target is the higher demand and supply zone. So I kept objective in front of you upfront, so that you will know what you are learning and how to connect the dots with the previous webinar. So by the end of this session, you should be able to understand step by step by this, what we have to do. Fine, everyone okay? Yes? Can I have yes from all of you if you are okay? So far, so good. It's clear. And Garima, if you have not seen the video, I have already shared on the group. You can have a look, and then you can again go through this session, what we are conducting today. Now, let's go through the magical world of gap. Okay, so I don't know what happened. Looks like my okay. So we will understand what is a gap and what is the magic about the gap. Now, everyone is everyone is well versed with the candlesticks, how they are drawn, from where the data is coming, open, high, low, close, everything. Can I have yes from all of you so that I know I'm addressing? Yes. Okay, great. So now you see what is a gap. Now, okay. So can you see the chart, ICICI Bank chart in front of you? Yes. Okay. Those who are saying no, I believe they might be attending this session for the first time. We already covered some topics, so just sit back, enjoy. If you're not following the session, no problem. I'm creating the playlist. I'll be sharing the playlist with you. You can go the videos in sequence, so you'll be able to understand. So don't worry if someone is not able to understand right now. It's fine. Okay, so just sit back, relax, and enjoy whatever I am sharing today. See what, first of all, a brief introduction. This candlesticks patterns was invented in Japan in 17th century. So Japanese have been using it for last 300 years. The Western world, the European world, and the American traders are using this candlestick pattern for last 30 years. So this is more of a Japanese technique to predict the direction of the market and earn money. So Japanese give lots of importance to the gaps. They pay very special attention to the gaps, and I'll tell you why. Now, first let's understand what is a gap. So for that, what I will do is I will just cut it here so that we are not distracted by anything other. As per the candlestick pattern, traditional candlestick pattern, as you can see, this is the high of the candle for 21st October 2022. The high is 910. Next day, 24th October, Monday, the candle opened, it did all the dance. The lowest point was 917.60. So highest point the previous day was 910. The lowest point the next day was 917.60. So there is a gap of 7 rupees 60 paise between this point and this point. This is called gap because this is very, very evident. Hence, I demonstrated this as a gap. Everyone clear what is a gap? Can I have yes from all of you if you have understood what is a gap? In the candlestick pattern, what is a gap? Okay. See, same thing is happening here. If we cut it here, I'll take 2-3 examples and then we will go ahead for the gaps. Okay. See, here it has happened from here to here. There is a gap. First, let's see this. This is 18th October. This is 17th October. 17th October high was 887.50. Here, the low was 891. So almost 3 rupees gap was there. So this is a gap. So gap can be 7 rupees, 3 rupees, or even 10 paise also. Okay. So let's find out 10 paise gap. So this is high is 872.65. High is 872.65. Low is 873.05. See, this is a gap of some 35 paise. Here, it closed at 872.65 and next day the low was 873. So 872.65. So 35 paise plus 5 paise. So 40 paise gap. So there is a 40 paise gap between this and this. Your eyes will get trained as you look more and more charts. My eyes are trained, so I can spot where is the gap without having to look at the low and high. Like there is a gap here. between this candle, this red candle, and this red candle. So this is the gap. So first confirmation, everyone is very clear about what is a gap? Yes? Okay. Now, why gap is so important? Why it is very different? Because if you find majority of time, the gap is not there. Like if you see, there is no, this is overlapping. Some portion is overlapping. Between this and this candle overlap, this and this candle overlap. There is an overlap between these two candles, 8th and 9th December, 7th and 8th, like this. Even if it is going up, even if the price is moving up, if you start from 14th November, where my mouse is, there is an overlap. There is no gap between the high of 14th November and low of 15th November. They are, the bodies are almost over, body or wick is almost overlapping. Between 15th high and 16th low, there is an overlap. So there is no gap. So between 16 to 17, 17 to 18, 19, 20. So there is no gap for almost, like we can say, from 14th till 1st of October, right? So gap is not a normal phenomena. It's not a daily phenomena. Every day, normally the candles are overlapped. Gaps will happen occasionally, once in 15 days, 20 days, something like that. So that's why these are something called rare phenomena, and that's why Japanese give them a lots of importance. So can I get a confirmation from everyone that you have understood what is a gap and why it is so significant? Because it does not occur very frequently. So this is the two things we have learned about the gaps as of now. Okay, great. Thank you for confirmation. Now, what is the magic about gaps? The first magic is, I have marked the lines to demonstrate it to you. Let's see for it going up. Okay, I just marked and I will show you to you. I will delete this and I will delete this. Okay, so there is a gap. There is a gap here also. Okay, so see what happens is, if there is a uptrend, see, it's almost like a V shape. The price was going down and then it started going up. So what? So if you see a gap here, okay, this is something I did not observe earlier, but let's, I'll still go ahead and show you the, okay, no, wait. Okay, for uptrend, that is not a very good example. Okay, let's go ahead with that as well. Anyway, okay, so see, there is a gap. The high is 731.90 and low is 733. So this is 731.90 and this is 733. So there is a gap of 1 rupee between 6th of July candle and 7th of July candle. Okay, someone, wait. Okay. Now, there is a gap here. I have drawn a line. This gap has come. Normally, it will come after few days. And as we can see, there is a gap here. Now, this gap, the high is 803.80 and low is 805.30. So 803.80 and 805.30, there is a gap of again 1 rupee. So we will draw one line here. So the point I'm trying to share with you, the magic of gaps is if it starts from going up, you take the first gap, then you take the second gap. When it is going up, when the prices start moving up, then whenever the first gap will come, that is called a breakaway gap. Then a second gap will come after some time. Okay. I think let me check whether it is there. 788.95. 788.95 and so gap is here. Okay. So let's take this. So this is the second gap which happened at this location. First gap, second gap. What is the use of this two? If you get this gap, then you measure the distance between the two gaps. Okay. Now, when you measure the distance between the two gaps, when you have this gap, how far the price will go up further, you will get that measure. So you measure from here to here. And if you see first gap, second gap, you can almost say that the price will go at least till here. After that, it can go further, but it will go at least this further. This is how the Japanese use it for making targets for trading. So they will wait for the first gap, then they will wait for the second gap, measure the distance between the two, and then trade as it goes. Similarly, for coming down, like I have measured here. Okay, I'll just remove this. Any other? Okay. Okay. So here, if you have to measure how far this price will go down. See, the prices have started coming down. This is the gap. Now between 26th April and 27th April, there is a gap. So we mark a horizontal line here. And again, there is a gap here. So we mark a horizontal line here. From this point to the lowest point in this gap, let's measure how much is the distance. Okay. Now, how far the price will go down? Because this is the first gap, this is the second gap. When it starts falling down, take the first gap, second gap, measure the price action between these two gaps, where it starts and the lowest it has gone before the gap. Measure that, keep it there. The price is likely to go down till there. It can go a little further also, it is okay, but it will give you a measure for if it starts going down, how far it is likely to go. So you can look for trading after that. Fine, everyone okay? So far so good? Okay. So let's see the current status. See, something has happened here. We have, this is ICICI Bank. The price started going down, the first gap down. Okay, from here, if we measure, and then this was the second gap. This is the second gap. If we measure here, the second gap will give us the measure how far it is likely to go. So it has gone and it has gone down. After this gap, it has gone down till here. Shirish, I understand your question. You are most likely looking for an intraday trade, right? So it does not work for shorter duration because in within the day there will be no gaps. If any share is having gaps in intraday, then you should not trade in that share because there should be no gap. There should be enough liquidity to have. Gap is a overnight phenomena. The gap happens overnight because of news, views, information available overnight, where which triggers the people to take some action the next day. Okay, gaps will not happen intraday. If it is happening, then don't trade in that stock. That stock is not a liquid stock or reliable stock. You might get stuck. Okay. Now, second thing is what Japanese used was that where will this stop? Normally, they will use the gap as a support resistance. So if they want to, I'll show you the reverse way how it will look. They will use the gap as the place where the share will bounce. Now, if I draw the line at the tip of this, just hold on. If I draw the line at the tip of this candle, which happened today for ICICI, and go back, you will find that there was a gap. Correct? Everyone can see there was a gap here. So if you want to see how far it will go, then normally what the Japanese will do is they'll find the gaps and they'll mark the lines here. Okay, this is the gap, so they'll mark the line here. Okay, and then where is the gap? Any other gap? Okay, they'll mark the line here. Okay, what will, oh, sorry. They will be using it as a support and resistance, demand and supply zones. So the prices are likely to stop there in case if it breaks tomorrow. If it breaks tomorrow, till what point it is likely to go, if we want to know, right? If we want to know how far it will go down, then we have to see this gap. And this is the gap. Before that, this is the gap which we can see between this. Everyone can observe? Yes, no? Okay. So let's draw a line. And this is a for everyone to observe tomorrow. If it tomorrow, if the market opens and the price starts falling, we have marked our line basis the gap. So we have taken this as a support. So did it fall and stop here? If at all it falls, will the ICICI stop falling here tomorrow and try to take a support here? So how many of you are going to have noted down this level? See the gap, open the trading view tomorrow, see the gap, draw a line here and see if it is going and like taking support there. Is it stopping there? How many of you have noted it down? Can I have yes from all of you if you have noted down? Yeah. So tomorrow or day after tomorrow, it may take 1 day, it may take 2 days, but it is likely to go and stop there looking at the support. Same will happen when it is going up. When it is going up, first it will face some resistance here, and then here. So this is how you can find out the support resistance levels also. Now, if I show you one interesting thing, which I found out while I was doing here. See, this is Bank of Baroda, and let me draw a line here. Okay. Now let's see where it took support. So it took support at, sorry, yeah, Bandhan Bank. Yeah. Okay. So see, Bandhan Bank, I have drawn a line at 209.55 matching where this price reversed. Now let's go back. See, still it has not come. If I come to the area of in somewhere in 2020, almost 2 years ago. Okay. This is a gap. Okay, I'll mark it. And I'll mark it so that you'll be able to observe. I'll remove this line. See, how many of you can see this gap here? Yes. There is a gap here. There is a gap here between this. This is low is 209.95. High is 209.75. So it is a gap of some 20 paise. So there is a gap here and gap here. If we mark this gap, so if two gaps overlaps, okay, it will become a strong support. This was two gaps, and what happened was after 2 years when the price started falling, after 2020, April 2020, now this Bandhan Bank, it came down, and it got stopped here. So using the same technique, if it is going up, where it will stop. If it has to stop going up, this point, this is a gap point. So this is the resistance level. So it will find difficulty crossing this level. Everyone okay? Everyone good with understanding the use of gap and use of the gap? Yes, no? Okay. So Yogendra is asking. Okay, so Yogendra is asking what is the reason behind this theory? I don't know. Honestly, I don't know. I read books and this is my experience. Gaps works wonder. This is given, this theory is given 300 years old theory. I don't know the logic and the reasoning why it works, but it works. Japanese use it. Maybe many people are using it. That's why it is working. I don't know the logic. No, Sandeep, I don't think it is a pending order or something. I don't know, but it works. This is how it works, and it works wonderfully. So you can use it. Okay. Can I have yes from all of you if you are okay? So far, so good. Yes. Okay. Great. Now, let's go to the reversal patterns. Now, let me go back to ICICI Bank if you allow me. Now, let me delete this. Okay, let me delete the drawings. First of all, I'll explain you what is the trend. Typically in candlestick pattern, a trend is something where the price goes down for few days. So this we call as a downtrend. Okay. So in candlestick world, we will call this as a a downtrend, because the price went down for almost 5 to 7, 10 days. If a price is going down for 5 to 10, anything greater than 5, okay, 6 days, 7 days, 8 days, if it is going down like this, it will be called as a downtrend. So this is, we can mark as a downtrend. Okay. Everyone clear with the downtrend? What we are defining as a downtrend for the candlestick reversal pattern? Yes. Okay. Then what we will do is we want to know now why we are observing this, because we want to know whether it will continue going down or from here it will go up, because our objective is to know or our objective is to get the answer. Can I buy the share now or it is likely to go down? Correct? Everyone has this question only in his mind. Okay, it is going down. But the question which we ask or anyone ask is when it will stop. ये रुकेगा कब नीचे जाना? कब ये रुकेगा? कब मैं खरीदूंगा? How far it will go down? And is it the right time to buy? Correct? Everyone has this question only. Yes. Okay. So what we do is, if it is going down, we draw a supply demand lines or support lines. Okay, so what we do is we see the point, this V-shaped recoveries previously where it has gone up. So ideally we don't know when it will stop. So what we do is when it is going down, we draw, right now I'm drawing the classical way of support resistance. So I'm drawing this line here. Let me draw a line here. So this becomes my supply demand zone. Okay, so previously see it did not cross here. So this was a resistance zone. After it goes up, this becomes a support zone. So this is a decent supply demand zone. If we match this band, we can say, okay, if we keep somewhere here, it was a resistance here, support here. Okay, so we are good to wait for a reversal pattern, because okay, we want to know whether it will stop here. If it is going down, whether it will stop here or and go up, or will it go down. So how the price action will tell us? It will tell us by a reversal pattern. So the reversal pattern, what we are going to learn first is, which is visible here, is bullish engulfing. Okay, so bullish engulfing, how it looks. Bullish engulfing is engulfing, right? Everyone understands the word engulfing. Engulfing is something covering the other thing. It's completely engulfing. Here, if you see, so first requirement is there is a downtrend. Second requirement is, if I draw this line, I should have some reference of past support resistance. Third is when the price reaches here, the red, there should be a red candle. Okay, this red candle body should be totally covered by a green body. Correct? Correct? Everyone can observe. Yes. When this happens, that means after a downtrend, after the price goes down for 8 to 10 days, the green body is covered entirely, red body is covered entirely by green body. That means the red body is engulfed by the green body. Green body is a bullish sign. Green body means the prices is going up. Hence it is called bullish engulfing. It is a bullish engulfing which will reverse the price to upside. So two conditions are very important. Downtrend, this support line based on the previous price action, then a bullish engulfing, there is a possibility of price going up. So where do I buy based on this? So I know the support resistance line, I know the downtrend. Where should I buy? You should buy, once you see this, you should buy above the high of this candle. You should buy a share above the high of this candle. Is it a guarantee that it will go up? Hana? So Mayank is very right. Bullish engulfing may always not be a good signal. I'm saying nothing is good signal. It's based on high probability. So there is a high probability that it will go up. Okay. So we have to be always ready to accept that, okay, if my prediction goes wrong, what I have to do. Okay. I will buy if the price next day, the price has closed here, the price may dance where, if it is crossing here, I will buy here. This is how you use the reversal pattern. Don't jump. Okay, 330 you see, okay, reversal pattern ban gaya hai, let's buy. No, you have to buy above the high of this candle. You have to buy here. What is the stop loss? Stop loss is low of these two candles. So this is the, and just remove it and let's call it. Okay. So this is 867 is the entry price. If it goes below 837, that means that bullish engulfing has failed. You have to take a loss and come out. In some session, we will be covering risk management and money management also. That time you will be understanding the position sizing. Today, we are not covering it. So you buy here and where do you exit? So you know the entry, you know in case of loss where to exit. Why we should exit on losses? Because you must have seen, observed, or heard from many people, they bought a share and they are stuck in the share has gone down by 30%. So somehow they didn't knew that okay, it is okay to book losses and exit. They, after buying, they did not exit and they are seeing a losses of 20-30%. They get married. Yes, Sandeep is saying rightly, they get married and they have seen it. We should not. We are, if we are doing a trading for a short term, short gains of 5 to 7%, 10% in a month, you should not get married. You should buy it and have a clear cut entry and exit criteria if you are trading by this system. So we have a downtrend, reversal pattern, buy here. You should decide the target. Our target is the previous top. Don't take this top. Don't be greedy. Take this top. See, these two tops are there. Mark a line here. And so this will be our entry. This will be our exit. And this will be our exit if the trade does not go in our favor. This will be our exit if trade goes in our favor. In this case, okay, so see, next day, what happened was this red candle. We will not enter because this line is here. So we can still place the order. We have to enter here only. This day we did not enter, we did not buy. So if it goes down, we are not in loss. Okay, next day we have entered. So this is the pattern we observed on 30th September. 3rd October, we did not enter. 4th October, we entered. So we should be ready to exit here or exit here. In this case, it went up. Okay, so we hold on. Okay, it reaches here, exit. Because we decided, okay, we will enter here. We'll take our loss here and we will take our profit if it closes above it or touches. So it reached here and we take our profit and come out. Fine. This is how you define your trading plan. Don't define your exit criteria after you have entered into trade. Majority of people who don't earn in stock market, they don't earn because they will enter into a trade and then decide when to exit after they put their money. Here, what our process was very simple. Pay attention to the process. This is very important. This, if you you have to understand what I'm trying to say here very clearly. Never forget what I'm telling you right now, and again repeating it. If you remember what I say and if you plan accordingly, it will be very difficult for you to lose money in stock market. But if you don't listen to what I'm saying right now carefully, then you will be part of people who lose money big time in stock market. What we did was, okay, just listen to me step by step very carefully. Very important thing. There was a downtrend, there was support line, we saw a reversal pattern here. Agreed? Yes. Okay. Then what we decided was, okay, if the price goes above this line, I will enter. So I have decided one, my entry criteria when I'm going to put the money in the stock. Correct? Can I have yes? Yes. Okay. Second is, I have decided my entry criteria. Have I put my money in the stock? Is my money already in the stock? Have I invested in the stock? Only I have decided the entry criteria. Correct? Now, when I'm deciding my entry criteria, the same time, my exit criteria should be also very clear. So I said, okay, if I enter tomorrow, whenever the price crosses this line, I will be entering the stock. Okay. If I enter the stock, how will I exit? I will exit if after entry somehow it goes down, my guess goes wrong, it goes down, I will exit below the low. So I have decided my exit criteria if my prediction goes wrong and the stock starts falling down. Have I decided the exit criteria? In loss? Yes. Then I have decided, okay, where will I book my profit? If it goes up, where will I book my profit? I will book my profit at the previous high. Don't be greedy. Don't take this. Take where it has hit multiple times. So this is 2 times it has hit here. Take that line. That is X. So even before investing a single rupee, always, whenever you trade, whether you are a long-term trader, short-term trader, intraday trader, whatever kind of trader you are, before you put your hard-earned money in the stock, you should be very clear in your mind, where is your entry, where is your exit in loss, where is your exit in profit. If you have this thing very, very clearly defined, you will be able to trade peacefully. You will not have turmoil in your heart and mind when there is a up and down happening in the stock market. You will peacefully know, I am not going to exit till it goes out down from here or till it goes down from here. You will not be having that emotional turmoil, psychological problems and all, nothing. Peacefully you can wait and let it go. We enter, ये क्या हो गया अभी, it has changed, huh? Earlier it was going down. Okay, so what happened to the red candle here? I don't know. Okay, anyway, let it go. Okay, so what will happen is, if your criteria is okay, you won't be happy here and you won't be sad here. If it goes up, you're okay. If it comes down, you're okay. You know, okay, I will exit only when it is coming here. It is going, you will neither be happy, neither be sad here. You have very clear cut defined ideas. So, okay, so now you come here and exit. If you have understood what I have said about the trading plan and how you should define entry and exit very clearly, of course, we'll be learning lots of entry and exit, but this rule is sacrosanct. Before putting your hard-earned money, you should be very clear where you will be exiting in profit and in loss. If you are following this rule, and if you have learned only this rule in this session, you will be a successful trader. If you have understood this rule, can I have yes from all of you who have understood this rule? Yes. Okay. I'll take a quick question. Gopal is saying it is very difficult to trace when you have many stocks. So don't increase the number of stocks in your portfolio more than 15 to 20. As simple as that. People I have seen, they have 50 stocks. If someone is having 50 stocks or 50 mutual funds in their portfolio, that means they don't know what they are doing. A simple rule. If you go back, look at your portfolio, if you are having more than 20 stocks in your portfolio, that shows you don't know what you are doing. Sorry for saying it very rough way, but that is the reality. If you have 50, then definitely you don't know what you are doing in stock market. So reduce the number of stocks to 20. Okay. Okay, great. Now I'll take a lot of examples. Okay. Now the reverse is also true. Okay. We have taken, there was a downtrend, there was a engulfing pattern, and the price went up. Before I go to a downtrend, now someone might say that, okay, this is also engulfing, correct? This is a red candle, and this red candle body is completely covered by a green candle body. So what happens is people start calling it as a bullish engulfing, correct? How many of you can see this red body, and this red body is engulfed by the green body? Yes. Don't mistake with this pair, and don't call it as bullish engulfing and say, okay, it will go up. No, this is not bullish engulfing. Correct, Devesh, absolutely right. There is no downtrend. For bullish engulfing to work, there has to be 6 to 7 days, 8 to 10 days of fall in the market. So there has to be a downtrend. Then if you see a bullish engulfing, it will work. Okay. Someone said there was a hammer. This hammer at downtrend is useless. Like I shared the video with you where I explained about the candlestick pattern. This hammer in a downtrend, yes, the price went up, that is okay. But this inverted hammer in a downtrend is useless. This is a fake hammer here. Sorry, this is not useful. This is more useful. On uptrend, I explained in the video I have shared in the group. This is useful to know that, okay, this is market is going to go down. This is a useless hammer. This is a inverted hammer. Okay, this is useful in uptrend. This is useless if it is a downtrend. It does not indicate anything. So don't look at the pattern as a standalone. Look what is happening before that, because this is a reversal pattern. So there has to be a trend to reverse. See, if you take a U-turn, you have to go in some direction and then you take a U-turn, right? You don't, if you're standing and you start walking straight and you say, no, I haven't taken the U-turn, it will not happen like that. So there has to be trend, then the pattern. This pattern is useless. This pattern is useful because this is happening after a downtrend. Are we clear with this example? Where you have to look for the patterns. Don't start looking for pattern here. अरे engulfing हो गया, नहीं engulfing नहीं हुआ है. पहले downtrend था क्या? हाँ था. फिर bullish engulfing हुआ, then it is okay. Fine. Very important. Similarly, if you see here, see what has happened here. The price was going up, 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 up. Now the green body was engulfed by the red candle. This is exactly opposite what happened, and what we saw example here. This is exactly what happened on a reverse way. This is called bearish engulfing, because red candle signifies the fall in downtrend, a bearish trend. So as you can see, this is a bearish engulfing. How you have to interpret as, if it is going the trend is going up, up, up. Sorry for that. Up, and then you see this bearish engulfing. You have to be careful that the price may go down. So if you are buying here, let's say if you bought here, because this is also a reversal pattern, let's say if you bought here, when you see this pattern, you would like to exit the stock if it goes down below this. So this pattern was there, so you exit here. Those who do derivative, future and options will go short here. Don't worry about future and options. I'll cover some basics in some time, in coming time. Okay, so everyone is able to see this bearish engulfing. Correct? Now, like Sandeep is saying, today also there is a bearish engulfing, but as per the classical definition, this bearish engulfing has not come after a uptrend. There is no uptrend. It may go down. Okay, it is okay if it goes down. उसमें कोई problem नहीं है. But I would give more significance to this than this because this came after a trend. People will start talking. There is a bearish engulfing, bearish engulfing. Don't fall for it. The engulfings you have to see after a trend. So this is a trend. Then if engulfing comes, it is very powerful. Engulfings coming in between, the probability of success is little less. Okay. So everyone clear about this engulfing, bearish engulfing and price going down and this engulfings? Yeah, this was the time to sell. This is time to stay away. Okay. When you get this in between, time to stay away. Don't do anything. Now, what I want you to do is, how many of you have joined with a laptop? Okay, Divesh is here. Okay. I am assuming, like, if possible, join with your laptops. Okay. Now, what I want you to do is tablet or laptop where you are logged in with the trading view. So what I want you to do is, I want you to, let's take HDFC, open HDFC and see here is the, okay, this is not an uptrend, this is sideways, so we cannot take this. So HDFC, see, this is the bullish engulfing here. Can everyone see this bullish engulfing here? There was a downtrend and this bullish engulfing, red candle and a green candle. And then price went up. So how we would have traded? This is our stop exit. This is a entry point. If it crosses above this, we enter here, we will exit here, and we will exit at the top of this. So this is our exit criteria. When the price came here, we exit. बाद में ऊपर जाता है, don't worry, don't feel कि अरे यार ये इतना ऊपर चला गया, I should have held it. No. Once you decide when to exit, you exit at that point, earn money, give party to your family members. Okay. That is how you should be. You should not worry, अरे इतना ऊपर चला गया, I missed the opportunity, nothing. The market will entice you. Market will pull you to do mistakes. Don't do mistakes. Whatever rule you exit plan you make, exit there. So those who are from laptop, I want you to scroll back. Okay, scroll back and find for me at least 2 to 3 bullish engulfings. How to find? Start looking at the V shapes. So there should be a downtrend. Start looking for V shapes. At the end of the V shape, you will find that bullish engulfings happening. See, here it is happening. So go, if in HDFC Bank, or you can take Reliance or whichever stock you would like to take. I'll give you 2 to 3 minutes. Note down where is the bullish engulfing and bearish engulfing. So where you have to see bearish engulfing is on the top. Okay, when there is a trend, here is where you will find the bearish engulfing. So I want you all, whoever has the laptop, find the bullish engulfing. So we'll wait for around 2 to 3 minutes. Take your time, take HDFC, Reliance, Infosys, any share, whatever you like. Wait, Divesh, wait. I know you have found. So just hold on for a minute. Okay, so what you have to do is you have to tell me, we will pause, don't type before 3 minutes, we'll pause for 3 minutes, go and find bullish engulfing and bearish engulfing, note it down, and you have to type in the chat the stock name or the code, date when the bullish engulfing is formed or a bearish engulfing is formed. So all with laptop, I want to go back, open the trading view, open the charts, and find some 4 to 5 bullish engulfings as per you. So I'll also be very clear that you have understood the bullish engulfings. So your time starts now. We will pause for 4 to 3 minutes, let's say. Okay. Yeah, Darpan, hold on. We will take, okay, you can type. As you find, you can type. So we will look add them one by one. Kiran, don't type May 9th. You have to type the stock name, like Darpan has typed HDFC 23rd May. So type the name and the date. Okay, Kiran. So again, you can type it. Good. Mayank has typed bearish engulfing HDFC 7th June. Right. 9th May. Okay, good. Keep on typing. Let's have some 8 to 10 and then we will see one by one how it is behaving. So we have, okay, so from Devesh, Devesh, please write the name of this thing. So HDFC 23rd May. Okay, Infosys 20th October, bullish, City Union Bank 16th May. Okay, how many have come? Okay. HDFC 30th September, Glenmark Life Sciences Limited. Shadab, please give the date. Otherwise, how will I search? Okay. So, okay, leave HDFC, find some other stock. One, at least move. Many people are writing. Okay. Okay. So let's take one by one. Great. Lot of inputs. Let's take one by one. So let's start with HDFC 23rd May. 23rd May. Okay. Where is the May? So you can go there directly. May is January, March, April, May 5, right? 5 and 23. Okay. No. See, this is Darpan, you have given HDFC 23rd May. This is not a bearish engulfing. See, for bearish engulfing, there has to be 8 to 10 days. Plus, it is not engulfing. It is not covering any candle here. Okay. So this is not a engulfing. Okay, I'll allow you to people to unmute. So please unmute and mute yourself if you have a question. Okay. So this is not an engulfing. Now let's say May 9th, May 6th, 7th, 8th, 9th. Yes. This is, we can call a engulfing again. Yeah, almost there. It would be good if it was, see, this is little bit down, right? So it has to cover. So when you are beginning as a beginner, you should not look for very close calls, right? And you should look it should be very clear to you कि यार ये पूरा engulf हो ही गया है. Okay, let's see another one, bearish engulfing 7th June. Okay, May, June. Okay, 7th June. Okay, 2nd June, 3rd, 4th, 5th, 6th. Bearish engulfing 7th June. Mayank, no. There is no engulfing here, right? Engulfing is the candle has to cover it completely. Okay, let's say 9th May. 9th May. It is not covering actually, and there is no trend. There has to be a trend, uptrend, and then bearish engulfing. Okay, let me cover HDFC, Devesh, and then I will come 16th June. 16th June. Where is 16th June? Yeah, so see, this bearish engulfing is coming after the end. This should be here on the top. This is not a bearish engulfing, means bearish. Bear means it will go down. So this bearish engulfing is coming after a downtrend. It has got no meaning. Don't pay any attention to this. It should be coming after the trend, something like this. If it is going up, this is bearish engulfing. This is useful. This is not useful. Fine. Okay, HDFC. Okay, let's take IRFC 30th November. IRFC November is 22/11, 30th. Okay. See, this is Divesh Goyal. He has shared this 30th November bearish engulfing. A classical bearish engulfing, that there was uptrend. This is a candle, green candle, body, full red candle body is engulfed by the red candle. If we draw a horizontal line and we see if there was a resistance in past, I think it has not gone so high in entire life. So it is okay. No problem. We can still take it. This is a bearish engulfing. There is a possibility of the price going down from here. So we short here or we exit here. The price is going sideways. If it crosses above this, we buy, otherwise let it go. This is a very good bearish engulfing example. Okay, Infosys 20th October bullish. Okay, let's say Infosys 20th October. Again, this bullish engulfing is 20th October, but it should not come here. See, the trend is already up. Bullish engulfing should come at the end of the trend, something like this. If it has gone down, 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 this is the bullish engulfing which should come. We should not take this 20th October bullish engulfing because it is not coming after a downtrend. See, here there is a downtrend. This is bullish engulfing, first class. If it is going uptrend, there is a bullish engulfing, not much significance because it is a reversal pattern. What it will reverse here? The trend is already uptrend. It is forming. So there is nothing called reversal here. It is reversing the downtrend. Okay, let's take City Union Bank. Okay, City Union Bank, 16th May, March, April, May, 16th. Okay. This is good bullish engulfing. So there is a downtrend, and then this is a red candle engulfed by green candle, and it goes up. Then any other BHEL 24th August. Let's take BHEL. G0824. Okay. No, there is no engulfing here. Okay. So there is no engulfing. Engulfing means the red there. First of all, there should be a downtrend and the red candle should be engulfed by the green candle. Okay. So okay, Reliance. So we'll take the last example, Reliance, 30th September. Yeah, this is a good bullish engulfing. So there is a downtrend, downtrend, downtrend. This bullish engulfing forms. We will draw a line and see if it was at traditionally support resistance levels. Yes, this is a demand supply zone. See, many times it has bounced from here. So this is a previously established demand supply zone. Yes, very good. It comes here. You have a bullish engulfing here, and then we take a trade till the previous top. It reaches here, exit. बस पैसा कमाने का, पार्टी बनाने का, और चिंता नहीं करना क्या हुआ ऊपर, क्यों गया वो. ओके. ये कौन सा है सैंडी? कैन यू अनम्यूट एंड लेट मी नो व्हाट इज दिस? ओके. Here, Sandy, can you unmute and tell me, or you can? Okay. No, Sandeep, I'm not talking to you. I'm talking to Sandy, who is typing. He's saying it was in year 2021. I cannot make a reference. So you just give me the name of the stock and date and year. I'll go and see. Okay. Just type that. BHEL 24th August 2021. Okay. Correct. Here is, see, this is also a bullish engulfing, but if our entry was here, it did not go up. So it went down fine. Again, we have bullish engulfing. Then we enter here and then it goes up. Perfect. Everyone okay? Can I have yes from all of you if you're okay? Understood the bullish engulfing, bearish engulfing, where we should look for bullish engulfing and where we should look for bearish engulfing. Clear? Crystal clear. I want you to go back and practice at least 50 bullish engulfing and 50 bearish engulfing to understand very clearly. Okay. Mayank, if a stock is taking support multiple times at the same location, that means like people find value at that price, correct? Like I gave example of tomato last time, that if it comes to 10 rupees, then many people are interested to buy at that for 10 rupees. 26th August is bullish and 26th August. Okay. Okay, now second reversal pattern, what we are going to learn today is, because we are already at 10 o'clock. So what we'll do is we'll learn and we'll take some more patterns next week. So one pattern, let me see. Is this. Now this is a typical pattern again, or let me take somewhere at the V shape. When I want one pattern, I'll not be able to see that pattern. I'll see all other patterns. Okay, give me BHL. Let's see BHL only. So we have, what I am looking for is something. Let's see if I can find. Strange, I'm not able to find. Okay, this is the last talk. Otherwise, we'll move. I'll show something different. Okay, I'm not able to find what I'm trying to show here. The not so very good version is this one. Okay. I'll just show you for showing. I'm not very happy with this location because it has not gone very much down. But still, for the sake of example, I'm showing you this. Okay, I was not able to find this in any stocks, whichever I went. Normally, this will happen many times, but today, because of my luck, I'm not able to find. Okay, so okay, so just understand this is the pattern. The price is going down and it reaches to a support level. Okay, so just zoom out. Okay, there was a resistance. Okay, this looks like a supply demand zone. Okay, verify that. And then at the end of the downtrend, the candle next day, this is the body. Next day, it opens at a higher price than the close. This is the close price. Next day, it jumps up and closes here, opens here, and it closes above the high of this red candle. If you find something like this at the end of the trend, at the end of the downtrend, this is called piercing pattern, and this shows that it is likely to go up. Again, the entry exit criteria is same. This is the entry. Above this is below, this is the exit. How far it will go? It will go to the nearest top. You take this and hold on to it to reach till its target. It has reached its target, you exit. Okay, so this is one pattern which you will see. Again, have a close look, and I want you to find out if possible, because I'm not able to see. Maybe you will able to spot it when you are looking at it. So this is how it should look at the end of the trend. So there has to be a downtrend. At the end of the trend, you should be having something like this. So this is a big candle, red candle. Second candle opens here and it closes above the high. So this is called piercing pattern. Okay, so I'll give you same target is defined same. Entry above this, exit below this, exit above the exit at the previous top. Simple. Okay, so I give you 2 to 3 minutes, try to find out such pattern, what I have shown here, this pattern. Go to some your known stocks and try to find out. I'll also search here in ICICI Bank. I think it's late, but let's complete one more pattern. I'll complete and then we will call it. Okay, Infi 14th May. Okay, let's see Infi 14th May 21 option G. 14th May. Okay. Yes. Correct. This is how it will look. So, of course, the downtrend is not so evident here. It's 4 to 5 days, but yes, this is how the pattern will look. Good find. It is going down. This is a red candle. The next day it opens here, closes above the high. Yes. Britannia 4th November 21. Okay, Britannia. Britannia 4th November 22. Okay.
22.
Okay. Okay. हाँ नहीं ये I need a red candle. One is the red candle and some downtrend. See something like this. Something like this. This has gone downtrend. Yes, of course, it is not a very good downtrend, and then this happens. यहाँ पे ना almost flat है और ये green candle है and ये green candle है. So this will not work the way we want. Okay. Huh. Okay. So Wipro 14th July 2021. Okay, let's see. July is 07, 14th July. Okay. This is one thing. Yes, this is a downtrend and this is a red candle and this opened up. ये बहुत ही ज्यादा excitement हो गया. This is also a little risky. It has gone too much up. But okay, yes, this is good. Yes Bank 16th August 22. Yes Bank. 16th August 22. Only Monday 22 now. Sorry. Yeah. So this is a evening star. So you have a red candle, you have a doji star, and this is called the morning star reversal pattern. We will come to this. Okay, let me see if something is here. Okay, so we today we are not in fee 17th June. Okay, let me take the last example and then we'll move ahead. 17th June 22, right? Yeah, okay, yes. So we have a downtrend, yes. So this is how it should look. Yes, this is also a good example. So we have a red candle. It opened here, closed above this. So this is piercing pattern. You can take. Everyone okay? Everyone good? Birlasoft 28th October 22. Okay, let me take this last one. Okay, Bsoft 28 October 22. 28 October. October is 10. 22. Okay. Bsoft only. This one only, Devesh? 28 October. Acha, ye. Now you see, this is good, but this did not close above the high. The green candle body or the closing should be above the high of this candle. So this is good downtrend. This gapped up here, but it did not close above the high of the red candle. So this is, we will not trade this. It has to close above the high. Okay. Okay, we'll move ahead. We'll take one more pattern, reversal pattern, which occurs many times and which is called Harami pattern. This is little weak pattern. So trade this carefully. Like Harami pattern is, it is, it looks like engulfing, but it's a reverse way. Okay, see here, the trend was going down, 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 down. This red candle is a big candle followed by a small green candle. The green candle body is within the red candle. This is not bearish engulfing. This is not bullish engulfing. This is a Harami pattern. Okay, let me click here and show you this. Okay, when this is going down, 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 this is a big red candle. The next green candle, the body is within this red candle. This is called Harami pattern. Again, the entry is above the highest of the two candles. This is our stop loss is this, and target is the previous high. Okay, this is how you have to take the trade. Let me show you some more Harami patterns, and then I'll ask you to search for it. it can be like this also. There is a downtrend, big candle, and the next body is small. This is also valid. This is a downtrend, a red candle. The next candle is within this. See, this is downtrend. This big red candle, the next candle is inside the red candle. But preferably, we have to go for red and a green combo. That is a more successful combo. See, red and a green combo, something like this. Okay. Was this Harami inverted in Maharashtra? What is this Maharashtra? Which stock is that? No, Harami is a like original Japanese name, so I don't know what is the origin. In Japanese, what I understand from reading book is a pregnant lady. Okay, so in Japanese it is called pregnant lady. So it looks like a pregnant lady, right? So this you have a big candle and a small candle, so it looks like the lady is pregnant. So they call it harami in Japanese. Okay, in India, in Hindi word, it's not a very good word, but we cannot help it. We have to understand the Japanese word only. Fine. So some people say harami, it's not a very good word. Why they're using harami? But in Japanese they say the meaning is good that way, right? Okay, so ICICI Pro Life. We have 28 November 2002. Yeah, correct. So this is a Harami pattern. It went down, down, down. This red candle and a green candle, and then it went up. Eventually, it came down. It did not reach the target. It's okay. We have to exit when it hits a stop loss because we don't know how far it will go down. Not success. Yes, it is possible, but we are playing a high probability game. Fine. Okay. So great. Great. We had three reversal patterns. I would request you to go back and practice them. I have a previous video also on this reversal pattern. I'll share that also. Today we went more on the practical way. That is covered in a little bit faster way. So I'll share the link to that also. I hope everyone enjoyed. So you got some clarity about the reversal patterns. What is a reversal pattern? How it looks? How to find that? How to wait for it? Yes? Okay, great. Some question was there, what could be probability percentage wise to success Harami pattern? Probability wise, it is lesser than the bullish engulfing and the piercing pattern. So that is in the third rank. So let's say 50%, 50% chances are there, like 50 to 60% chances we can say. Okay, so that brings to the end of the session. We are already at 10:30, so that's why I'm seeing a lot of people dropping off. एक घंटे के ऊपर patience खत्म हो जाता है. Okay, so we will not take the question answer session this time. We'll take the question answer sessions next time. Fine. So I'll be sharing the recording. Keep your questions ready. We'll take it next time. I'm seeing a lot of people dropping, so looks like एक सवा घंटे में energy down हो गया है. I hope everyone learned a lot of things today and enjoyed the session today. Thank you so much for joining. See you on next Wednesday with a new topic. Thanks a lot.